everyone, and welcome to XM Live in the beginner's room. And welcome also especially those who are watching us from YouTube or Facebook. We are a service that is streaming every single day from 8 o'clock until 8 hours per day. Depends where you live, of course. 8 hours per day on 3 different channels. That's 24 hours every single day. There is content for beginners and advanced traders. We are 12 experts, I think, more or less. Sometimes we have also guest experts here. And you can just watch us over how we are trading, what mistakes we are doing, what we are doing right, our trading strategies. You can learn everything from us. And I hope you will enjoy it. Now, this is the beginner room. And in my first session of every week, for those who don't know me, I'm a full-time trader since 2012 already. So I do this 11 years. I'm mostly trading currencies, indices, and commodities. That's my main focus. And I start every week with the weekly outlook. And I believe the weekly outlook is crucial in order to be successful in the long term. The weekly outlook helps me to prepare for the whole trading week. It helps me to be aware of the news that can move the markets. It shows me based on the COT report. And for those who don't know what is the COT report, I'm just sharing here the report with you. It's data that is free downloadable from from a US government website, and it shows how market participants are positioned. So you see here 5 groups. We have the dealers, we have asset managers, we have leveraged money, that is hedge funds, we have other reportables, and we have non-reportables. And if you know how each of those groups, how they position themselves, or what is their way of thinking, then you can position yourself based on their positions. So what we are doing on Monday morning, or what I'm doing actually on Sundays, and I share it with you on Monday morning, is prepare for the whole week. I go through this COT report. You can see there is many products we can analyze. There is dozens of products we can analyze. I look at the big picture, so in the daily chart, weekly chart, I look at the fundamentals, and based on everything together, I create a couple of trading ideas, because I think one of the major challenges in trading is that you have thousands of products you can trade, especially when you trade also stocks. There is thousands of products. How to find the product that fits your trading strategy, or the product where you have moves? Because if the product is not moving, if the product is just sideways, you don't make money, right? So you need a product that is moving, and of course you hope, of course, it's moving in your direction, and this is how you make money. So I search for those products over the weekend. I get ideas, like maybe 10-15 products, and those are the products where I will focus on during the week. And most of the time, there are also products that really move in my direction and that are very good. So I see here already, we have William here, we have Stefan here, we have Danushka here. All to you, welcome to a new week. And let's hope that we will find a couple of trading ideas that will make us money. Now I will start. So we go a little bit systematically. By the way, you can see here the trades that we open on Thursday, they go very nicely in my direction, and we have beautiful profits here. And of course, we will look at them every single day and manage them as well. Okay, so with no further ado, really now, let's start. And let me first take a sip of coffee. And I just realized that also for those people who are watching us from social media, I have to open the chat so I can see really if you have questions. So that's another thing. Those are live sessions. They're not pre-recorded or anything. This is how we trade the markets. You can see everything in live, and you can ask me questions. And you can give me also trading ideas. I mean, the idea here is that we build a community and we create trading ideas, and so we can profit from them, right? So I will start with a general overview, and here I would like to start with the daily chart in the S&P 500. The S&P 500 moved quite as expected. So we had here a head shoulder formation. We broke this, we made a pullback, and we went to our target. The target was exactly here, and it touched it almost by the point. Since then, it recovered. The question is, now if you look at the daily chart, it's still a downtrend because you have lower highs, lower highs, lower highs, lower highs. But here we are very close in making a higher high. And as soon as we move above this place, we are not anymore in a downtrend. At the moment, it's still a downtrend, but there is a lot of momentum on the upside. Now, if you are a technical trader, or you go into a smaller time frame and you trade this in a smaller time frame, if you're in a big time frame, how do you know if this is the end of the downtrend or if this is just a correction and we go further down? And I think it's not possible to know if you look just at technical analysis. So I'm a big fan of looking at other sources that give me another clue if markets is rather going up or down. So I do fundamental analysis. In the fundamental analysis, I'm analyzing the markets based on economical events, based on financial and market conditions, based on a risk appetite, in order to conclude if I believe this goes rather up or rather going down. So I will give first an overall picture. I think we are entering at the moment into a new area of trading. We had Corona. During Corona in March 2020, markets dropped sharply and central banks lowered their interest rate to zero. And they started to print money at the same time. So this is end of March 2020. And from this very moment, markets rallied. And we had one of the biggest rally in market history between 2020 and 2021. End of 2021, we started to get high inflation, and central bank started to raise interest rates during the whole year of 2000. Maybe I go now into the weekly chart. So we had in 2021, so we had here, this is Corona, that's the rally, and this is 2022. Central banks started to raise interest rates and the stock market came down. Now, this year is positive. We ended the year here, and since then we are quite up. Now, we continue to raise interest rate, but I think at this very moment, we started most central banks, they topped their raising of interest rates, and they will not raise anymore. We saw this probably, of course, only assuming that the market situation is as it is. So inflation is coming down, we normalize inflation, the job report gets a little bit weaker. We saw this also on Friday. So with a little bit weaker job market, the tendency is the economy is softening, and central bank said we reached our goal. Our goal was to bring back inflation to a normal level. We see the direction, it's still too high, but the direction is right, and we don't have the urge to raise further interest rates. And this is exactly what happened recently. Now, why do I explain this whole history? Because I believe that now we will come into a market situation that is different from 2020, 21, and 22. Because now central banks, because in 2020, 21, and 22, central banks were very active, first in lowering and then hiring interest rate. And this created huge trends in the markets, also in forex market, but also in equity markets. Now, when central banks start to be the same level, then all the central banks said, you know what, we keep interest level high, but we don't have the urge to raise any further. We could start to see sideways markets, especially with currencies. In general, I think this fading out of raising interest rate is also a bullish signal for the stock market, because the stock market, and this is exactly what we saw. And now let's go again from the weekly into the daily chart. The rally that we saw in the previous week has exactly to do with the fact that the Fed actually said, we finished raising interest rate. So we finished raising interest rate. This is so the next step probably, and we don't know when is the next step, if it's in March or if it's in June next year, or if it's even only in 2025. It doesn't matter. But the fact that we topped, and probably the next step will go interest rates going down, that's bullish for the stock market. And this momentum, I believe, will continue. So we have very strong stock markets. We see a softening by the US dollar. Here you can see this is daily chart of US dollar index. So you can see the US dollar gets weaker. By the way, we have also to check this, and you have to see how crazy we are. We are here. This is a weekly chart. US dollar index was at the highest for decades, and it went high up again until now, but now it broke down, and I think US dollar could get weaker, and that means that other currencies that looked very weak in previous weeks, like euro dollar and so on, they could go up a little bit. Now, with currencies, for example, like euro dollar, I think it can go up. I doubt that it goes up very strongly. So when we look in the weekly chart, I assume that we will start to be in a bigger range here, something like that. But at the moment, I think we have a weakening of the dollar. We have a bullish stock market, maybe a year-end rally in the stock market. And that's the general consensus. Now, next year, it will be very important to understand why interest rates are falling. So if the next step is really that interest rates are falling, the question will be, why are interest rates falling? And there can be two answers. One answer is inflation gets better and there is no urge that interest rates are that high. And that would be a very good scenario. And in this scenario, I believe stock markets will continue to go up. But if interest rates going down because we go into a deep recession and we will have financial turmoil, the lowering of interest rates can actually have an effect that the stock markets will drop extremely strongly. Now, this is the big picture. This is just in 10 minutes explained how I see the fundamental picture. If you have further questions, I will answer them. Okay, and Danushka is asking, if this changed to higher highs, how do you enter the trade technically? How do you calculate the stop loss? Okay, that's a good question, and I will answer. So US 500. So let's say we start to make higher highs here. So at the moment, by the way, a short looks very interesting from a risk reward ratio, because I could go short and put a stop loss here, right? So this is my risk, and that could be my reward if we see the continuing of a downtrend. But again, I doubt that we will see a downtrend at the moment. I think everything we saw at the moment is quite bullish for the stock market. So if we make new higher highs, this is a very good question. How do we trade that? And my answer is, normally you have to trade it in a lower time frame. So as soon as we break above, obviously we are not anymore in a downtrend. By the way, in the daily chart, we are then not anymore in a downtrend, but we are also not in an uptrend, because in order to get an uptrend, you need to have a correction, and then you need to have two higher highs here. Two higher highs you have, but you have also to have two higher lows. So actually you could enter only here, something like that, and not here. But let's say you want to enter already here when we don't have lower lows anymore and not anymore lower highs. You want to enter here. I think the answer will be to enter it in lower time frames. So you go into the 4-hour chart. Also here, you see how